Welcome to the Wiggin Sessions. I'm Addison Wiggin. I have with me today Perth Tolle, who I've just begun to meet. Perth Tolle is the founder of Life and Liberty Indexes and creator of the Freedom 100 EM Index. That ticker symbol is FRDM Index. Prior to forming Life and Liberty Indexes, Perth was a private wealth advisor at Fidelity Investments in Los Angeles and in Houston. She's talking to us today from Houston. Prior to Fidelity, Perth lived and worked in Beijing and Hong Kong, where her observations led her to explore the relationship between freedom and the markets. And that's something that we're curious about as well. So welcome, Perth. Thank you for joining me today.
Thanks for having me.
I'm going to give you an opportunity to tell your story more than just what's in your bio. I just read your bio, but if you want to talk a little bit about your life in China, and then what brought you back to the States, and how you ended up with Liberty and Life and Liberty, indexes.
Yeah, thank you. So yeah, no, I grew up in both China and the U.S. I was born in Beijing, and I lived there until I was about 9 years old when I moved to the U.S. And after college, I went back and spent about a year in Hong Kong. During which time I traveled throughout China to, Beijing, Shanghai, Shenzhen, other mainland areas. And that's where I first saw the difference that freedom made in my life, how different my life would have been had I stayed in China versus having come to the US as a child. And so, and also I saw the difference that freedom made in the markets in these various places, in the China market versus the US market, versus at that time, the Hong Kong market was very different from the mainland market. So that's when the seed for the idea for what I do now started. And then when I came back to the States, I worked at Fidelity Investments, as you mentioned, and I had a lot of clients who were like me. They were from other parts of the world, from say Russia or Saudi Arabia or China. And then they may have said, well, I don't want to invest in my home country because of the humanitarian reasons or things that go on there that I don't want to be involved in. So at the time, with emerging markets investing, there were very few options. Actually, there were no options that didn't have a huge allocation to these autocratic countries. And that's just the nature of emerging markets. The universe is rife with autocracies, and a lot of emerging markets are autocracies or coming out of autocracies. So that's just the nature of that country universe. And just to back up on that a little bit, in international investing, obviously we have developed markets, we have emerging markets, and we have frontier markets. So developed markets are all pretty free, pretty homogenous. These are markets like US, Japan, Germany, and so forth. And then emerging markets are less free and less homogenous in their freedom levels. There's a huge dispersion between freedom levels in the emerging markets. And then frontier markets, same as emerging as far as freedom levels in the dispersion, but very few people allocate to frontier markets, so it's less of an issue for investors. But with emerging markets, a lot of people will have an allocation, and they may or may not realize that half of that allocation is typically in the world's worst autocracies, like China, Russia, Saudi Arabia, and so forth. And in fact, right now, if you look at market cap weighted indexes and funds, about 40% is in those countries, and about 35% is in China alone. Now, China's weight was 45% in most of these indexes and funds at its height in August of 2020, and it's come down to about 35% since then. And so we see this huge concentration in these autocracies, and that's a huge risk for investors to take. So what we did is we created the freedom weighted strategy, which is the FRDM index. And this is an emerging markets index that is weighted based on the freedom levels in those countries. And we're using third-party quantitative freedom scores from think tanks like the Cato Institute and the Fraser Institute.
Yeah, it's interesting that you mentioned both of those places, because I worked at Cato back in the 90s.
Did you?
And one of my responsibilities at the time, I was kind of like feeling my way around in sort of the libertarian world. I was interested in free market economics and that kind of thing. Yep. But one of my responsibilities was to take the Freedom Index and make sure that it was distributed to the media and follow up with people and talk about it,
Really?
those kinds of things. It was a long time ago, but
When was that?
it was in, let's see, 1998 and 1999.
Wow, that's awesome.
Yeah, yeah.
Okay.
So let me, I just want to dig in a little bit because you have the experience of having lived in an autocratic society like
Yeah.
China, and then you've lived in the US, which is increasingly autocratic, but not nearly to the level of those. What is important on the investment landscape between a free society and trying to invest in an autocratic society? Just to break it down so
Yeah.
people understand why it's important that you created the FRDM index.
Yeah, so a lot of the risks and why people don't like to invest in emerging markets, such as non-transparency, lack of data, independent verification of data, and opacity of ownership structures, and bad accounting standards and things like that, currency risk. A lot of these risks are heightened when you're investing in autocracies. And China last year was the biggest example of that, when they carpet bombed all of their companies for reasons having nothing to do with economics or business. And so you saw that last year in China, all the companies in China, and these weren't state-owned enterprises, they were just tech companies or education companies or doing business, private companies that have to answer to the state before all other stakeholders. So, for example, Didi, right? That IPO, as soon as they IPO'd, the state said, well, you can no longer add new users on your app. Well, it's an app. So if you can't add new users on your app, you can't do business. And so they said, no, you didn't have permission to IPO in the United States. And then they now have, now they're delisting. And so investors in Didi basically lost all their money. They don't even have a chance to recover. So this is the worst case scenario. Now, besides Didi, the education companies, we saw what happened there. Overnight, the state said, you have to now become nonprofits. And why did they do this? And so these are online education companies. They're like tutoring companies. They're very lucrative, very profitable companies that were, great investments up until this point. And when China said, they went from the one-child policy from the time I was growing up, 30 years from 1979 onward, to the two-child policy since about 2015. And then now it's the three-child policy. When they went to three-child policy, they're trying to encourage families to have more children, right? So they're saying, okay, well, tutoring companies are too expensive, and we want to decrease the cost of having children. So now we're going to make all the tutoring companies nonprofits. So they're basically, you're familiar with freedom thinking, and the thinking there is basically all freedoms work together like parts of an automobile. And this is what my think tank partners say. You can't have a steering wheel without the transmission, the car won't run. So you can't have one type of freedom and not the other. And in this case, what they were doing is reproductive freedoms, right, or a personal freedom. Shareholder rights are an economic freedom. They're trying to fix one by they're trying to fix the transmission by ripping out the steering wheel. So they're saying, well, we're gonna, make all the education companies nonprofits. So now people will have more children. When the true answer to that would have been to remove all restrictions on how many children people can have in the first place, or even incentivize people to have more children, instead of punishing publicly traded companies. And these are companies that Americans were invested in. Some of them were listed on American exchanges, but a lot of them had exposure in emerging markets funds. And whenever this happens, the people that are most exposed to it are investors in emerging markets funds, broad emerging markets, just because of the sheer size of those funds. Those funds have the most exposure to these Chinese companies that were carpet bombed last year. And this regulatory risk isn't going away. So you see a lot of this kind of these risks, that why people don't invest in the emerging markets in the first place, they're heightened when you're in the autocratic markets.
And so a lot of investors in funds aren't even aware that they're putting money at risk through the mechanism of the fund. And then, so that was sort of the genesis of the idea that for the life and liberty indexes, right?
Yeah, Freedom 100. Yeah.
Well, the Freedom 100, but I meant just in general, the company is to identify places where you're not putting your capital at risk because of, policies that change on a dime, or some government official wakes up on the wrong side of the bed or something.
Exactly. These are just the stroke of a pen. And we prefer to invest in companies where they're free to put shareholder interest first above the interest of the state. So there's a lot of emerging markets that are very free, like Taiwan, South Korea, Chile, Poland. Every emerging market has its problems. Chile is having its own problems now. We all know that. Poland has issues too, and so do all the countries, including the United States, as you mentioned. It's just the relative level of freedom in these countries are so much higher than those in like China, Saudi Arabia, and Russia, that we don't want to put our money in the unfree markets where they are exposed to these autocracy risks. We'd prefer markets where companies, at the very least, have the freedom to put their own interests and the interests of their shareholders and customers first.
So you mentioned some of the problems that Chile is going through, and Poland, and then also we feel like our freedoms are being restricted, mostly due to the pandemic and mandates and that kind of thing.
Yeah.
In the United States, Australia, and Canada are going through it worse than we are. What do you make of that kind of sweep of sort of authoritarian response to the pandemic? And I'm just going to couch that in like, I recognize that it's nowhere near as bad as like a China or a Russia. Like the freedoms still exist, but we have a tendency to get emotional about our individual freedoms, and actually political debates over the vaccine or the mandates or the masks are endemic of a debate among citizens, whether we still hold those freedoms or not. Do you can you just compare and contrast? Because I think it's vastly different still.
No, I think you're right. It is still vastly different. I have family in Hong Kong still. I have friends in China, and there's zero COVID over there. So they cannot even travel. I mean, they're completely stuck where they are. Hong Kong, is a very normally crowded city, and now it's completely empty. Going to the IFC, it's completely empty. It just looks very eerie, and there's no comparison to that and what we're experiencing here. I'm fortunate to be in a place, I'm in Houston, where there really aren't any restrictions at all. I personally am vaccinated, and I do wear a mask when I go out, but indoors, but it is a completely a personal choice. And in our schools, it's a choice of the kids. And so and that has worked out well for us. And I've done travels to Canada last year. It was very different there. And it worked, but that worked for them too. So, and now we're seeing the kind of a very healthy, I guess,
blowback.
Yeah, exactly. on that in Canada. But that's part of living in a democracy, is that there is this kind of, you can push back on what the government is doing, versus in China, you can't push back on what the government is doing.
I was curious, and this might sound a little bit conspiratorial, but there were fairly widespread protests in Hong Kong up until the pandemic, and then the city just got shut down.
Yep.
Is there any inkling that the government used the pandemic to really shut down that sort of pro-democracy movement? I think I don't think they planned it, but I think they used it to their advantage.
Yeah, I mean, I think absolutely. Not that they planned it that way, but anytime you have something that can strike fear in people and give them an excuse to prevent assembly, the freedom of assembly, obviously they're going to use that. They, in Hong Kong, recently there was a birthday party for a government official where a lot of people were infected, and you see that it's a very hypocritical type of, okay, the rules apply to you but not to me, right? You can't assemble because but we can't. So it's and we've seen similar in other countries. So yeah, I think governments tend to impose these rules for their benefit, or to further their own agendas, versus giving the people the freedom to do what they want.
The phrase we like to use is never let a good crisis go to waste.
Exactly.
And it's actually up for debate who said it first, but a lot of people attribute it to Mark Twain. So, for what it's worth.
Yeah.
So let's can we dig in a little bit into the countries that you do like?
Yeah.
Like
So
in the index, maybe talk about how the index is structured and what you look at, and when you need to make changes, what are the kinds of things that you'd be looking at to move your weighted average?
yeah. So we use a relative freedom level to peers, right? So we look at the absolute freedom level, not, the potential for them to improve, but the absolute, like, what is their freedom level right now? And we look at both personal and economic freedoms. There's 76 different variables that are compiled by Cato and Fraser from third parties. So there's 2 layers of third party objectivity there on my end. One layer they're using third parties, and one layer I'm using them. So that is a score that is compilation of, personal freedoms, things like civil and political freedoms, like terrorism, trafficking, torture, freedom of speech, freedom of media, freedom of religion, freedom of assembly, things we're talking about here, due process, criminal process, rule of law, economic freedoms like taxation, business regulations, freedom to trade internationally, sound money, so forth. So all of these added together gives us a composite score for each country. And we take that composite score and our algorithm turns it into country weights and inclusions. The worst offenders are naturally excluded as a result of the freedom weighting process. So China, Russia, Saudi Arabia, Egypt, Turkey, those are excluded altogether, which is very different from most emerging markets indexes that have like 40% in those countries. And then the remaining countries are weighted according to their freedom level. So it's 100% freedom weight, not a tilt, not an overlay. And we're looking at their relative freedom to their peers. If you're freer than your peers, then you're included and you have a higher weight, right? So the highest weights right now are, yeah, go ahead.
Well, it just sounds kind of complicated. It sounds like a lot of math.
Oh, no, it's actually very simple. So basically, the higher the freedom, the higher your weight. So right now, our higher weights are in Taiwan, South Korea, Chile, and Poland. So, yeah, so that's kind of the algorithm and or our process. I shouldn't say algo. It's process, and it's basically based on the third party freedom scores.
I remember when I was back at Cato, one of the things that we published or tried to update regularly is like the length of time that it takes to open a business as a indication of economic
That's
freedom.
one of the metrics, one of the 76.
Yeah, and at the time, Hong Kong was a place where you could open a business in like 7 hours or something. It was like ridiculous. But then when it reverted, I mean, for a period of time, I think there was a grandfather period after it reverted to Chinese rule.
Yeah.
From the British that those, like, you could still do that for a little while, but then they shut it down. So it takes forever now to open a business in Hong Kong, right?
Yeah, so Hong Kong is a case where it was it had very high freedom levels, and now after the protest, after the national security law, by the way, what we're doing here is illegal under the national security law. Probably, like if I was in Hong Kong, I'd probably be arrested. Probably a low priority arrest, but still. So national security laws is this sweeping law that makes anything that may be anti-government or pro-freedom like basically illegal. So if you
light, and that's just in Hong Kong or across all?
China launched the law in Hong Kong, so it applies to Hong Kong, but in the law it's written that it can be applied extraterritorially. So based on that law, they could come get us as well. It's just a ridiculous. I mean, of course, they're not going to apply that because we're here, in the United States, but based on the way that the law is written, it can be applied anywhere in the world.
In case they need it.
Yeah. So after all of that happened, some data providers like Heritage, for example, stopped ranking Hong Kong altogether. They're just like, we're not going to have it in our index anymore. It's just completely right. We don't know what to do with it. And our data provider said, no, we want to document the decline. So we're going to keep them in there.
Well, you can document the decline, but also it gives it shows like what level you begin with, like zero freedom, and that gives you a baseline to calculate what freedom looks like.
Yeah, and so it is a very sad scenario where they were one of the freest in the world, especially on economic freedom. I think people sometimes fail to distinguish between personal and economic freedom. So in economic freedom, they were the highest in the world, tied with Singapore. But that's going to be affected now as well. We've seen bank accounts of like Apple Daily and also of some activists frozen because they've taken a stand for some pro-freedom issues. And so that's
just to give an example of that too, it's happening in Canada. They as we speak, they just passed or used the emergency, I forget what it's called, Emergency Act, where they're threatening to seize the bank accounts of the protesters on the border, which, I mean, that's very draconian, but that's exactly what China does.
Yeah, that's not good.
No.
That's definitely a slide toward autocracy. It sounds like.
Yeah.
So that's definitely not good. I expect pushback on that though in Canada. There's no can't push back on that in Hong Kong. You'll be in jail. In fact, a lot of people are. But yeah, I do expect vigorous pushback in Canada on that.
So what if you're using freedom and economic freedom, like the 76 factors as a measure for which countries to invest in, how do you then, you must drill down to specific investments that you're involved in?
Yeah, so once we have the countries and their weights, then we look at the securities within the country, and we take the 10 largest, most liquid securities. We have minimum size and liquidity requirements, and we exclude state-owned enterprises. And that's just to bring the economic freedom theme all the way through. The less government intervention, the better on the country level and on the security level. So it's the 10 largest, most liquid. And in the past, most years, this index had 10 countries included in there. That's not capped at 10. It's just the way it turned out. This year, there's 11. So in the past, there's been 10 and then 10 securities per country. So that's why it's called the Freedom 100. This year, it's 110 holdings. But that's basically how we arrive at the security selection.
So in the FRDM index, all the securities from each country are in that index. Yeah.
The top 10 largest, most liquid only.
Right.
That are not state-owned enterprises.
And then within that framework, do you pick and choose, like some rise, some fall within each country?
I mean, we don't pick and choose any further than that. We take all the top 10 that are, meet our requirements and that are not state-owned enterprises. And yeah, with an index, some are going to go up, 400%, and some are going to go down to 0. And that's going to happen. That we take the whole basket. And so after that happens, we don't rebalance until a year later. It's an annual rebalance.
Oh, okay. That's kind of what I was getting at, is when you rebalance.
Annual rebalance. It's not an active strategy. It's a systematic. I would consider it a passive strategy, but it's not market cap weighted. So some use the word passive to mean like market cap weighted, and it is not that. But I'm using passive in the sense that it is systematic, and I'm not going in there and actively picking and choosing stocks.
Yeah, except once a year.
Yes.
Yeah. So how has it performed? Are you happy with it?
Yeah, we have happily to report, we have outperformed the benchmark since inception. We've also outperformed even ex-China since inception. So that shows that it's not just the China exclusion, which is a big part of it. But freer markets do tend to have more sustainable returns. They tend to recover faster from drawdowns. And we saw that in the recovery from COVID. On a massive scale, and then they tend to use their capital and labor more efficiently. They have less capital flight and capital distraction. So over the long run, we do expect to see continued freedom alpha, but we're not here to promise outperformance or continued outperformance, and we do have outperformance right now, and we're happy about that. But we're just here to provide a more a freer country exposure for clients, so that they're not investing in autocracies with their investment dollars in a broad emerging markets fund.
Do you consider including the U.S. or say like Great Britain or France or Germany, some of the bigger
you know what, we have considered doing a developed market version of this, but we decided against that because the developed markets are all pretty homogenous in their freedom levels. And they're all much higher freedom levels than emerging markets in general. So that's where, we didn't see much value add in a strategy like this in the developed markets. You can get a developed markets fund, for like 4 basis points. So, we can't really compete with that and add a lot of value, because if you freedom weight the developed markets, or if you market cap weight them, you're still getting a pretty free country set, relatively speaking, compared to emerging frontier. So yeah, we didn't see much value in doing that. But so right now we're just focused on the emerging market space.
When I was studying frontier markets, because I thought they were interesting, like I went on like a junket with Frontura. Do you know them? They mostly do, like, when I went to Laos, Cambodia, and a part of Thailand.
Oh, that's awesome.
Yeah, and they were looking at, like, one of them was they built the first competing brewery. They built Kingdom Brewery, which is a lager that is kind of like nationally known in Cambodia. But there was only one other beer to choose from in Cambodia at the time. So they went in and they built the brewery and they funded it and all that kind of stuff.
Yeah.
So they go into frontier markets that are very underdeveloped. But the reason they do that is the upside, it's only upside. Like all they can lose is the cost of building the brewery in that instance. But I looked at like a cassava farm in Laos, and there was a hydroelectric dam that had been built by the French colonists, like a long time ago, and they were still using it, but it was, it was very run down and whatnot. So they rebuilt the dam and started producing electricity for the first time in 100 years or something.
That's awesome.
Yeah, so it's interesting, but the reason they do that is because there's virtually zero competition. And then the upside is if it's restoring economic activity, then that investment is going to pay off for a long time.
Yeah, no, that absolutely. That's very exciting.
Let me get to the question part.
Yeah.
Like, compare the frontier countries, the really underdeveloped, like one of their funds goes into Haiti and tries to rebuild like basic infrastructure. And they had to build a hotel there for aid workers. So I'd just like you to compare that sort of base level frontier investing to, to a South Korea or Chile or Poland.
Yeah, absolutely. We do get into some of the smaller emerging markets, which are close to frontier. So, markets like Thailand, as you mentioned. Thailand has a 2% weight in our index, but so it's not that free, but it's higher than the average. So it made it in there. But this is very interesting what you're saying about coming from a low base, and the emerging markets and the frontier markets kind of share this. Frontier markets, obviously, more so, but you're coming from a very low base. In the emerging markets, also, the valuations are so low compared to US and developed markets right now that you have that advantage of there's pretty much only upside. Not to say there's only upside. It could still go down, but it's a much lower base than the developed and US markets from a stock market perspective right now. But what you're saying is, how interesting it is to set up these businesses in the frontier markets, and I think that is a fascinating space. We are not involved in that on a public market scale, but I'm very interested in looking at that maybe as a like a portion of the emerging markets fund at some point, because there are just some very interesting markets. Like there's a company called dLocal in Uruguay that is a payments company that I just think is so interesting. And these are companies that are making people's lives so much better in these markets. And so I would love to be able to invest in those type of companies. And that's an ADR, so that's very easy to invest in. And it's very easy to kind of add that as a, like, okay, so we can have like maybe a small percentage of the fund in what's considered frontier markets, or we can reclassify certain markets as emerging. We do set our own universe. So that is a possibility in the future. We probably, I looked at a separate frontier markets fund, but there's just no liquidity there. And it's very difficult to set up a publicly traded fund.
Yeah, actually, part of what on that trip that I went on, it was probably 2015 or something, they were still opening the stock market in Cambodia.
Okay.
And so one of the investments that they were getting involved in is you could actually invest in the stock market itself, like
Yeah.
the actual company that's setting up the stock market. And there were only two stocks that you could trade at the time.
Yeah. Yeah. And the liquidity is like almost zero probably. So yeah, that's the difficulty of frontier markets.
Right.
But I find frontier markets hugely interesting for the same reasons as emerging markets in the freedom,
Yeah.
space, because there's just so much dispersion. You got frontier, like this is classified as frontier, but if you talk to like an Estonian or a Latvian or a Lithuanian, they're gonna be like, what? We're not frontier, but
Yeah.
but it's just the size of the markets. It's just
Yeah.
the market cap, total market cap. And so those markets are extremely free and they're standing up for freedom, like, Lithuania and Taiwan right now. I mean, and going against China with, China threatening even companies in Germany from doing business with companies in Lithuania because Lithuania said Taiwan is a country and we're going to stand by them and we're going to stand for freedom. And so yeah, no, that's a hugely interesting space. Companies in countries like Estonia, like Latvia, Lithuania, Uruguay are very interesting to me. So I would love to be able to do something at some point, whether it's public markets or even private markets.
Yeah. When the last time I was in South America, we did a thing in Colombia. They were trying to do an exchange that included Ecuador. Forget the three countries that were involved: Chile, Ecuador, and it might have been, I don't think it was Colombia, but they were trying to create an exchange that would compete with the Mexican in terms of volume, and also Brazil.
Yeah.
Did they manage to pull that off? I haven't researched it, so I don't know.
I'm not familiar yet with that story.
They were trying to create one exchange that would compete on volume with Brazil and Mexico.
Yeah, no, there's some very
sounds like they must not have pulled it off.
I'm not familiar with that, but maybe there's some very free like country like Peru in South America, but just don't have the liquidity.
Yeah.
They don't meet the minimum country level liquidity ratio or requirements for us to, the market cap ratios for us to invest in. So I would love to, get into those markets as well. So there's a lot of potential and possibilities that we can expand into.
Well, great. One thing I would like to get you to comment on is we've been throwing this number around just because one of our colleagues is trying to provide access to the markets for individual investors. Mm-hmm. And because of the restructuring of laws that allow people to invest in different asset classes and stuff, 35% of investments in the New York Stock Exchange now are retail investors.
Oh, wow.
So it's risen dramatically. When you're reaching out and trying to get people to invest in your fund, what is your target audience for the fund?
You know what, our target audience is anyone who would prefer a freer country set in the emerging market space, whether that be for human rights reasons, because we do look at personal freedoms, or whether it be for economic freedom reasons. And so that's a very wide audience. But when you first start an ETF, you're not big enough for institutional yet. So we just recently became big enough. We have about 125 million in assets right now, but that's that's a recent thing. And a lot of that came in at the second half of last year when China proved our thesis. So right now, most of our investors, I would say even maybe all of them, are retail and advisors to retail. So we only have visibility into the top 10 owners of the ETF. The ETF, I don't know who, I don't have complete visibility. It's not like a mutual fund where you know who owns it. So the top 10 holders are all retail advisors, right? Like Raymond James and so forth. But recently we've had a lot of institutional interest. I think once we hit 100 million is when institutions started looking at it. There was a great feature on the strategy in the Institutional Investor as well. So if you look up the Institutional Investor article, actually, I think we'll link that here at the end. That kind of talked about the strategy, and that I think generated some interest in the institutional space. So we've had actually some public pension funds reach out to us recently that have, and one of them, just recently invited us to respond to an RFP, and RFP process is totally new to me. And I'm like, wow, this is some process here. but that is beginning to interest institutions. And the reason why this particular institution reached out is because they said, well, we're underweight emerging markets. We'd like to be more neutral weighted. And so we're looking for a long only strategy. But our board members expressed a lot of concerns about investing in China and other autocracies. And so I was like, okay,
So
well,
it's
that
a
makes
good
sense.
alternative.
Yeah. So that's something that's starting to happen. And I have another pension plan that's reached out and said, will you do something in the fixed income space? Because they actually said BlackRock iShares is trying to sell us Chinese bonds, and we just aren't sure that these aren't going to be used. The money's not going to be used to build concentration camps. So I was like, okay, we'll look into that. So yeah, that's, again, a lot of areas we can expand into. And I'm actually kind of being inundated by these requests. And so but right now I don't know what our next product will be. I don't know if that'll be fixed income or frontier or what it will be. But and also people in different parts of the world are asking for the FRDM index type of product. So yeah, we have a lot of options here. So if anyone has any feedback as to what should be next, please feel free to reach out and let me know.
Yeah, if you do get institutional clients, do you expect a boost? Like that would kind of give you a broader profile, at least in terms of credibility within the institutional market.
Yeah, I mean, I think the more interest we have from institutions, the more other institutions are interested. I think that's can be expected. But as for me, I love the fact that we are just a publicly traded product that anyone can get into. That's the reason why I launched this as an ETF. And when I created the index, I intended it to be an ETF for this reason. And I just, because of the tax efficiency, the low cost, the access to local markets and the emerging markets, that's another reason this institution reached out, because their managers didn't have access to the local shares on the local exchanges. And we do as an ETF, because we pay for that within the ETF for our investors. And so I think it's just such a beneficial wrapper for investors to be in. And I love the fact that anyone can buy, a fractional share if they want. So it's definitely democratized the strategy and investing in general. I love the fact that institutions are interested now, and I hope we can help them. But all of that is icing on the cake at this point.
Yeah. So if somebody watching this wants to get involved, if they want to put their money in, what should they do?
Okay, so
also I'm just gonna say that we're gonna put the information below this video so that if people want to act on it, they can.
Yes,
but
check out the the ETF is available to anyone. The website is freedometfs.com, and we will link that below.
Can you just explain what make it easy for people to understand how they get in? They just
you just buy it in your brokerage account. So it's like buying a stock. So the index ticker is FRDM. So you can kind of find it that way. And the ETF is just tracks that index. And you can literally buy it like you buy any stock in your brokerage account.
Great. Awesome. Well,
and again, just a caveat there, we're not guaranteeing the future performance will match, historical returns. We're not, guaranteeing continued outperformance. And it's just basically it's an emerging markets product. So this is appropriate if you're an emerging markets investor and you're familiar with the ups and downs in emerging markets. So,
right. You're also interested in freedom.
Yes. And you want a freedom weighted emerging market strategy. We are the only one in the world. We are the first and only one. So
awesome.
I'm proud of that.
All right, Perth, it was really nice to meet you, and thank you for talking with me today. Like we said, we'll put the information below so people can click on it if they're interested, and good luck to you.
Thank you. Thanks for having me. It's great to meet you as well.
Yeah, and hopefully we'll talk again.
Sounds good. Thank you.